Hey everybody, welcome back to all of our favorite stock show, the Wealth Advisory's Top 10. I think we are going to have to change the name though, because as I announced last month, our fearless co-captain here is going to be taking the helm of a new ship, the Crow's Nest. So we're sort of combining the Crow's Nest and the Wealth Advisory together. Now Jason's still rebuilding the shattered portfolio that was the Crow's Nest model portfolio. So he'll be picking some Wealth Advisory stocks for the next couple of months or for the first few months.
Until we get rolling over there.
But we'll be having some good individual picks from the Crow's Nest coming up in there. And so I don't know, maybe like top stocks with Jason. Or the Jason show, you know. I don't know. I would love suggestions. If you guys have any, drop them in the comments. Speaking of comments, we got a really nice one. MD, thank you. I really appreciate your comment. We love doing this, and that's the reason that we do it, is because we want to give good commentary and good analysis to people and help you guys with your investments. We hope that you join, like I always say, and become a full member of the Wealth Advisory. You'll get the entire top 10 list, plus weekly updates, monthly issues. We also hope that you join the Crow's Nest as well, become a full-fledged member of that. You know, you'll get the entire video, the whole list with the Wealth Advisory's top 5 stocks and the Crow's Nest top 5 stocks. You'll get weekly updates with that. You'll get monthly issues with
we start monthly issues.
Crow's Nest as well. So that's something that used to happen, but sort of fell off and is coming back now that we're under new management over there. I like to see that. The Crow's Nest is a really great publication, so I'm really happy to see Jason taking charge of it. I think everybody who is a member is going to really benefit from that. If you're not a member, like I said, you should join us. We'll put some links to discounted memberships below the video in the description. But if you don't want to join us, that's okay. We'll continue to do this. Like I said, we like doing it. You see, Jason's coming back, even though he's not part of the Wealth Advisory anymore, because we enjoy this so much. So you'll keep getting the first 4 picks, 2 from him, 2 from me, and then we'll cut it off because this is a service that we offer for our paid subscribers. But all we ask is that you subscribe to the channel on YouTube, like the video, give us a thumbs up, hit the bell to make sure you get notified when we post new content, and drop comments. You know, they're not always positive comments. But this month's was, and I really appreciate that. But I'll address them, you know. Let us know what you think of the videos. Let us know if there's other stuff you'd like us to cover. Just let us know you're out there. And with that, let's go ahead and get into it. We had some pretty good stock picks last month. We had some that went down, some that went up. The market definitely has been recovering from its post-Liberation Day sell-off. Liberated itself from a lot of profits, but we're back up. There was a point, I think actually right now, the S&P 500 and the NASDAQ are both positive year-to-date, and they have both entered bear markets, down 20% from their peaks. So that really goes back to what I've been saying over the past couple of months, and what Jason had been harping on the past couple of months, is that, you know, you never know when the best days of the stock market are going to come. They often come right after the worst ones. And so trying to time the market, it just becomes a fool's errand, because, you know, if you sell on the worst day, the next day might be the best. And we literally saw that where in April, we had a couple of days that were like the best days in market history. I think it was the 4th best day in the S&P's history, or since World War II, in the S&P 500, and the best, like the biggest points day on the Dow in its history, and the 2nd or 3rd biggest percentage gain in history too in one day. We had a 9-day rally that was the biggest rally or the longest rally in 20 years. You know, so anybody who got out of the stock market because they got scared after Liberation Day missed all of those rallies. Anybody who bought while it was down, who embraced the fear and was greedy while others were fearful, like Warren says you're supposed to, they did really well. So I really hope everybody took advantage of that, subscribers and folks who are watching on YouTube. And this month we've got some really good picks that I think have a lot of short-term and long-term potential. And we're going to go ahead and get into that. And I already sort of discussed it, but I'll just mention it again, that after we get through the first 4 picks, we're going to go ahead and cut this off for those of you watching on YouTube. It's a service that we offer for paying members of the Crow's Nest and the Wealth Advisory, and we don't think it'd be fair to give away something for free that we charge people for access to. So we will put a link in the description below the video to both the Crow's Nest and the Wealth Advisory to a discounted membership, so that you can become a full-fledged member. You get a lot more than just the top stocks, but honestly, the top stocks can be enough. I mean, with just one of them, sometimes you can pay for a full year's membership. I mean, we've had a couple of months where you could have paid for a lifetime membership with just one of the picks. So hopefully this is one of those months, right? And with that, we're going to go ahead and get into it with my first pick of the month, which is one that you guys should recognize. Adorable mascot. I actually saw this guy when I went to go visit the company. It's Prairie Operating Company. The ticker symbol is PROP. And this one has been a feature for the past couple of months for me. I really like the stock. It sold off really hard on a financing, and basically, the financing got priced lower than the market expected. The market sold the stock down to the financing price, and it's sort of been bouncing around there. It gave us a little gain this past month, though, as markets are starting to realize the untapped value. I mean, the company has been growing. It's growing at like 1,000% a year as far as production goes. It's got this hedging program in place where it's got about 85% of its production locked in, sold above market prices, because market prices are currently around $60 a barrel, and that's got people out in the Permian kind of scared, because it's like $65 is like break even around there. In the Denver Jules Basin, where Prairie works, their break-even price is lower. It's in the $40 range, and Prairie actually, through their cost-cutting measures and their efficiency measures, has the potential to get their break-even price down to the high $30. We're talking like $38, $39. So even $60 a barrel oil, they'd be making money on, but they've locked in prices at like $65, $68 on 85% of their production this year, and more than 80% of production going forward to into 2026 as well. So right now, that hedging program is looking really smart, because folks are worried in the oil market the prices are going to stay low for a while, but Prairie's not worried at all, because their cost of production is low, and they've locked in prices relatively high for where the market is right now. It's starting to get new coverage from investment banks. Analysts are catching on here, so that's helping it attract more investor attention as well. Like I said, the hedging program is just doing great. They've got a rock solid balance sheet. They've got a big credit facilities, so they're ready to expand, and they've got good opportunities to expand in that area. I mean, I just really, really like this company. Everything about it is great, except for the share price slide that it went through earlier this year. And I gotta say that I think it's gonna recover, and I want everybody in on this one, because when the market comes around, I really think it's gonna soar. I think we're gonna get even higher than it was before the slide. So number 10 overall, number 5 for me this month, Prairie Operating Company, ticker symbol PROP. And let's pass it over to Jason and see what he's got for us.
All right.
It's a good one too.
We're going to talk about some tariff-related plays here early on.
And more traditional energy.
LP. There we go. So this is Alliance Resource Partners. This is one of the biggest coal producers in the United States, the second biggest, in fact. And what I like about it is, if you are looking to get away from some of the volatility with respect to the tariffs, this is a good way to do it, because it's largely a domestic business, and it's one that's pretty well locked in. So, which is say its order book, 96% of its 2025 revenue is locked in by contract already. So it's not going to fluctuate in the short term based on coal demand or coal prices, because the contracts are already inked. 96% of its business is already pretty much locked in. Additionally, less than 10% of its sales are foreign exports. So it's not a huge coal exporter. The coal it produces generally, overwhelmingly, is domestically used. And it also doesn't require foreign import materials, so they don't have to worry about paying more for foreign input materials to produce the product. They just have to dig it out of the ground where it is. Additionally, 7% of its sales come from oil and gas interest and royalties. And it also sneakily operates a crypto mining and hosting venture that holds over 500 Bitcoin and basically sells excess electricity to Bitcoin miners. So they have kind of a bit of diversity in places that you might not expect, but overwhelmingly, this is a domestic business. It is vertically integrated. It is U.S. based. It is U.S. customers, and we know what we know about this administration. They're pro fossil fuels. They're pro coal. They're going to be here for this. We're seeing now with this legislation too. Green energy subsidies going out the window. All right. Regulations on things like fossil fuels being relaxed. So it's a great environment right now for a coal producer like Alliance Resource Partners, and so that's why if you are like looking at this situation, you're trying to find companies that are not really affected by any of this tariff business. This is kind of where you want to go. You don't really have to worry so much about commodities prices. You don't have to worry about policies because we know the policies underpinning the coal industry, as far as this administration is concerned, is pro. So that's why I like Alliance Resource Partners right here.
Oh, I'm going to be honest. I did not know about the Bitcoin.
I just found that out myself. I was just doing some extra
really
research, and I was like, that is a fascinating tidbit. Obviously not a huge part of their business, but it is an interesting one for sure.
It is. It definitely is. It's interesting for the cryptocurrency world, too, because it just sort of shows that, institutions are really coming around to these assets,
Yeah.
These digital assets. And, I mean, we've been talking about them for a while. We think that the digital assets are definitely like a wave of the future.
And with the demand for energy and electricity, they'll get it any way they can get it because they need so much of it.
Definitely.
And so this is, obviously a good situation for them.
They're building data centers out where I live in West Virginia, and those are going to be coal powered.
Mm-hmm.
Yep, definitely. What's really nice about them too is a lot of the coal that they mine. Any of the U.S. coal companies, they don't have to transport it too far because typically, you have your power generation set up right next to your coal mine. So
Sure.
It's like pull it out of the ground, put it into the
Plug it right in.
Yep, love it. I like that hedging program they've got in place too. Love those hedging programs. All right, guys. So next up is my number 4 pick, our number 8 pick, sorry, math's off a little bit there. Our number 8 pick for the month, and it is another oil and gas related one. And it's another one that tends to do well when oil and gas prices are lower. It's Sunoco. We love Sunoco in the summer, S-U-N. Everybody loves some sun in the summer. And that is a great segue into one of the reasons that I love Sunoco right now is the summer driving season officially began with Memorial Day weekend last week, 2 weeks ago when you're watching this, here in the States. And people are going to be driving. And I got a feeling with all the stuff that you're hearing about, like issues with airlines and air traffic control and stuff like that. For those who don't know, Newark Airport keeps just going blank. Like their air traffic control towers, keep losing, the screens that they're talking to pilots, and then all of a sudden they're like, hey, we can't see you anymore. Are you still there? And that's a scary thing to hear. So anyway, I think people are going to be doing a lot more driving this summer. Also, like I said earlier, oil prices are lower. So that means gas prices are lower. So that means people are going to, feel a little bit better about putting some gas in the car and taking the kids to the beach or to the mountains or to the park or wherever, or taking the dogs, for those of you without kids, or taking the cats for those of you who take your cats outside on leashes. It's adorable to see, but it's kind of weird at the same time. But anyway, taking things anywhere. I think people are going to do a lot of driving. And Sunoco pulled back a little bit last month, but it's looking like a really good bet for gains this summer. It's well insulated from tariff trouble. It's targeting record growth in 2025. It's tying up its acquisitions. It's spinning off cash through its dividends. The chart's forming this wedge pattern with higher lows that could turn into a breakout any day. And when stocks compress, they tend to move out of that compression cycle for as long as they've been compressing. And so we've got a few months worth of sort of a wedge forming there in the stock. So if we break out to the upside, we could have a breakout that lasts all summer. So I really like Sunoco. It's going to benefit from lower oil prices because it's going to sell more gas. It's going to transport more gas. Summer driving season, it always sells more in the summer. Kind of like Scott sells more fertilizer in the spring. So it's a good play for the season. It's a good play that's sort of insulated from tariffs, like Jason was talking about with our last one, and it's just a great company all around. So let's have that one in there for number 8, my fourth pick this month. All right, and here's Jason with our final YouTube pick.
Yeah, here we
another
go.
good one. I really like this company. This is another one that brings back fond memories of childhood.
But for different reasons. But this is
completely
Oshkosh. I just want to talk about a bit. But they make a lot of great things. They have a defense business, which is pretty strong. They also have a really robust industrial business in terms of producing like cherry pickers, airport vehicles, the kind of heavy-duty equipment, fire engines, all that kind of stuff. And I'll talk a bit more about that in a minute. But the real reason I have this up there is because this is another kind of tariff play. But it's kind of the opposite of Alliance Resource Partners, in that this is kind of a buy the dip play. And here's what I mean by that. So the stock is up 23% in the past month, but it's only up 5% year to date. And the reason for that is because it's built a lot of momentum in the past month as the tariff kind of threat subsided. And then if it comes roaring back, you'll probably see it drop down a little bit more. And the reason for that is Oshkosh has said that if the tariffs are implemented, it's going to cost them about $1 per share for the full year results. That's not crippling. They'll be fine. But additionally, they expect to offset that by about half with cost reductions. So what we have with Oshkosh is an opportunity. If you buy it when it's low and you think tariffs or the tariff trade is on, then they're still going to cut costs. But if the tariffs don't materialize, they're just cutting costs and going to improve their bottom line through the end of the year. That dollar hit to their full year revenue earnings per share may not, in fact, come if the tariffs don't actually happen. So it's kind of just a situation of going like, are they on or are they on? And I say with Oshkosh, you buy the dip in this situation because we're talking about a company that's over 100 years old, that has a really strong foundational business. They do defense sales as well as those industrial sales I was talking about. And they actually they call them vocational sales. And they saw a 47% increase in the first quarter, up to $118 million, mostly due to increased demand for garbage trucks and recycling trucks. That kind of demand, that's not going to go anywhere. Tariffs or no tariffs. When you have those kinds of heavy-duty trucks and you're the company that provides them for municipalities across the country, that demand is, going to stay. It's going to be resilient. And so everybody pretty much with Oshkosh is just banking on the tariffs taking effect and just driving the share price down. And then when they don't think the tariffs are happening, all of a sudden the stock bounces back up. So my advice on Oshkosh is buy the dip, all right? Like, get in there, and take advantage of it, because when you have a company like this, huge track record for success, reliable, resilient business built in, government work, great company to own long term. You get into a cycle like this, I'd say about an immediate term, there's still probably another 10% upside to it. It's still about that far off its 52-week low. So it still has more room to run if things remain positive on the tariff front. And again, if they get negative, the stock only becomes more attractive. So I like Oshkosh here, short term, long term, and that's why I ranked it in.
Yep, and I got to tell you guys, Jason knows these stocks, and when he says BTD, you should BTFD. I'm serious. Every time he said to buy the dip in one of these defense contractors, it has roared back. It has been a really good decision for our investors, so I highly recommend everybody take his advice.
It's easy money, folks.
It is. It's easy money. All right, so those are our first 4. Let's do a little recap, and then we're going to cut this off for those of you watching on YouTube and finish this up for the full-fledged members of the Crow's Nest and the Wealth Advisory. So here we go. Recapping my first pick, Prairie Operating Company. Like I said, everything this company's doing is great, except for the share price not screaming higher. And I think that the market's going to realize the value that's laying there latent, and that we're going to see a big rally coming up. So I want everybody involved in this one.
Right, Alliance Resource Partners, big coal producer, very coal-friendly, fossil fuel-friendly administration here now. Probably going to, kneecap clean energy a bit, which is only going to be good for coal, and then insulated from any kind of tariff issue. U.S. produced commodity, domestic buyers, just sturdy business all around.
Yep, very good one. Next up, Sunoco. We like it in the summer driving season. We really like it because gas prices are lower, so people are going to want to buy more gas, so they're going to make more money selling gas, transporting gas, doing all the things that they do with gas. and they're going to keep spinning off cash. They're looking for record growth this year. How can you not want that in your portfolio?
Yeah, Oshkosh, a little bit more of a tariff weather vane. If the tariffs lock on, they will withstand it. If they don't, then it's only going to be better for the stock, and it's only going to shoot higher.
All right, folks, there you go. I think we've got a pretty solid list there for those of you watching on YouTube. I think the rest of the list makes it even more solid, though. So if you want to join us and become a full member, get the whole video, you can join the Crow's Nest or the Wealth Advisory, or even better, both, by clicking the links in the description below the video. We'll give you a discounted membership. Honestly, any of these stocks could pay for your memberships over the course of the next month with the profits that they could bring in. And so, like I said, though, if you don't want to join, we won't hold it against you. We love making these, so we're going to keep making them. We'll put them out there on YouTube. We just ask that you subscribe to the channel. Give us a thumbs up if you like the video. No thumbs downs, though. I don't like those. Comments are fine, and I won't tell you that you can't make negative ones. I may address them in a snarky manner on the video later. If you make positive ones, I'll thank you for them. Thank you again, MD. We love helping people like you. That's why we do this. And so, yeah, if you decide not to join us, just subscribe to the channel, hit the bell, make sure you get notified when we post new content. Drop us a comment. Give us a thumbs up, and keep coming back for more, and we'll see you next month. Take care.